Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Let's start with headlines first. BYJU'S releases financial audit for financial year 2022, reports standalone revenue up at 3,569 crore rupees. Civil aviation regulator urges Pratt and Whitney to establish a maintenance, repair and overhaul facility in India as engine issues continue to persist. State-sponsored cyber attacks on Indian government agencies were up 460% between 2021 to September of 2023, as per a report based in Singapore. Boom in OTT move to a slow lane. Total audience for OTT platforms rose 13.5% in 2023 as against 20% a year ago. And government issues orders to ban illegal betting apps, 22 apps in government scanner. All those stories right here on Newsline. Thank you very much, all of you, for watching us. Karthik, good to have you in the studio.
Thanks, Shweta. Good morning.
Good morning. Beginning with the top story that we're tracking, which is BYJU'S. BYJU'S finally has released its financial year 22 report. The financial audit report points to a lot of interesting figures. Run us through the database. So
yes, I think to put it in context, 18 months too late, Shweta, but BYJU'S has finally released its audited statements, financial reports for FY22. Remember, these were supposed to come out in the month of September after a much delayed, in any case, timeline. But we have finally seen that the numbers have come out and interesting figures popping in there. To begin with, of course, as expected, the entire edtech space was growing, continuing to grow even in FY22. And that results in the 2.3x, almost 3 times the number of users that BYJU'S got and the revenue that BYJU'S added by way of the total number of people subscribing to its education platform and the tools and the curriculum posted there. But interestingly, we also see that there has been a narrowing of losses. Now, this narrowing of losses is obviously good news, but the fact is that it continues to have losses in excess of 2,200 crore rupees or so. So this means while there has been a decline in losses from 2,400 crore levels, it still is a fairly large loss-making unit. Now, look at the EBITDA or the operating margin. The margin has also improved, but still continues to be in the negative territory. Overall, it is nothing really, surprising as far as these numbers come. These are staggering numbers. There has been a growth as expected, but at the same time, there have been losses mounting in thousands of crore rupees year on year. We have seen that, 2023 was the time when FY23, I'm talking about, April 2022 to March 2023. FY23 is when we saw markets really opening up, schools resuming. Overall, this decline in edtech started surfacing only in FY23. So while this 18-month delayed FY22 numbers come on expected lines, I think by end of the year when FY23 results come, that is when we will actually see how bad a situation BYJU'S could possibly be in. Now, just to add further context to this, what are the issues which are plaguing BYJU'S right now?
Before we move to that, I also want to understand, there's nothing surprising in these numbers. Are these numbers in line with the expectations? Are they good or bad? How is one to interpret these numbers?
Okay, so Shweta, I think, it's fairly obvious. Everybody knew that there would be growth when it comes to revenue for all edtech platforms in FY22. So on that account, this number is not that surprising. I don't think anybody was expecting degrowth. This was a time, FY22 was a time when there was this boom almost maturing for edtech. So the kind of 2.3x growth, 3,600 crore levels that we've seen, to me, it doesn't seem unexpected. Neither was anybody expecting this company, which was on a very high aggressive growth path, to immediately turn profitable. I think growth is something that all venture capitalist funds, all investors obviously always push startups for. And that push has resulted in the numbers that we have seen, right? Now, unit profitability, unit economics is something that listed companies, which are listed on the stock markets, those investors look for profitability, right? So I think it works quite inversely when it comes to privately funded, VC funded startups. versus mature listed organizations, because all VCs want is the startups to grow at all cost, continue acquiring more customers, burn cash if required by way of advertising, branding, etc. And then, of course, the acquisitions that you keep making. So there were a total of 9 acquisitions that Byju's had made in FY22. So the idea was to grow at all cost, and that growth at all cost has resulted in the statements. The cost there, of course, is the losses which have mounted. Now, again, losses have declined despite this enormous growth. Losses did not go up in line with growth. Losses have declined slightly. But again, I don't think this was unexpected. I am really looking forward to FY23 reports, because that is where I feel you would have seen a plateauing, if not a decline of growth. And then this term B loan which Byju's had taken would have kicked in, and that would have messed up the books, a little more.
Okay,
but
so financial year 23 report would be a make or break for Byju's.
I'm not sure if we would still call it a make or break or not. See, remember, we are at an interesting juncture right now where, because of the reduced valuation at Byju's, raising fresh capital would be easier. It is easier to put money and take a larger stake in a company which is not $22 billion. Right. If it were still commanding the same valuation, then raising capital would become difficult for Byju's at this stage, because VCs would get a much smaller share of Byju's at a $22 billion valuation than they would when the company is at about $5 billion, $6 billion valuation. So raising capital may be easy enough for Byju's right now, but dilution of stake for Byju's would be higher, which means this declining valuation is bad news for Byju's. It will have to shell out more equity to raise the same amount of money as it would have liked to raise at a higher valuation by parting with a smaller chunk of equity. But there are other challenges also. Number one, of course, is this whole Aakash listing. So we don't know what is going to happen to that. Aakash continues to be a profitable business for Byju's, and even after it acquired it, about 2 years ago, Aakash is something that, by virtue of listing, would give Byju's a much better sort of leg up when it comes to its overall image makeover. And of course, additionally, raising public funds through an IPO is going to help shore up some financials for Byju's, but that is still pending. The $1.2 billion loan that we spoke about, we still don't know how, in what capacity and how much would Byju's be able to pay and when. Now, add to this the no clarity yet, so to speak, on Great Learning and Epic, the 2 platforms which Byju's had acquired, part of those 9 acquisitions, which it now wants to sell to repay part of yet? Or all of. We don't know. I mean, there are multiple talks on. There are US-based companies which are perhaps looking at buying it, but we don't know where that is going to head and how long before that comes to an end. Now, add to that more complication. Byju's CFO, newly appointed CFO, Ajay Goyal, has also quit just 6 months, 7 months into the company, a little longer maybe. Has gone back to Vedanta, where Ajay Goyal came from, because Vedanta is also undergoing this massive, demerger of its multiple businesses. So troubles don't seem to end completely with just stating out this FY22 financial audit report, but at least one step at a time, those reports have been released, the financial statements have been released, and thereby, setting the stage for FY23 numbers also to make it to public domain in some time from now. Hopefully, end of this year is something that Byju's had targeted. In fact, even Ajay Goyal, when he was CFO, had said that December is when FY23 numbers should release. We saw FY22 numbers, despite this very, very long stretched deadline, miss the September deadline and get released only in the month of November. So by that account, if not December, maybe Jan, mid-Jan, end Jan, we should be able to see FY23 numbers. And thereby, we'll know whether there is any hope really still left in this large edtech industry to continue growing, and if not, is it time for consolidation? And it'll give us some cues on where the sector is going at large and where specifically Byju's could go from now.
Absolutely. So we'll have to wait for that FY23 financial audit report. All eyes will be on that. But moving on to a story that we're tracking by the way of India's rather turbulent civil aviation sector is concerned. The persistent issues with Pratt and Whitney has now prompted aviation regulator to ask them to actually set shop in India. You want to service those fleet, you want to service those aircraft, but how do you do that if you do not have a facility in India? Pratt and Whitney has been asked, we don't know whether it will comply and do it.
I mean, see, it makes complete business sense for any engine maker to not transport every spare or transport back every faulty engine to its base location, which happens to be US for Pratt and Whitney. And for an aircraft carrier fleet so large as it operates in India across multiple airlines, I think it makes eminent sense for MRO, which is maintenance, repair and overhaul facilities, to be set up in India itself. Now, what are the issues that we have seen with Pratt and Whitney? I think obviously no surprise there. 50% of the Go First fleet before 2nd of May, when it filed for voluntary insolvency, was the faulty Pratt and Whitney engine linked fleet. So 26 out of 52 of Go First aircraft had to be grounded, and Go First had squarely put the blame on Pratt and Whitney and Pratt and Whitney alone to lead it to a point of insolvency, because it was able to operate only 50% of its fleet and hence just about 50% of revenue. Now, running an airline, obviously, as everybody knows, is a very, very expensive affair, because there are capital investments that need to be done. There are licenses to fly, pilots that come at expensive salaries, and of course this entire capex of aircraft, the airframe per se and engines separately, is the bulk of the cost. And for every time that you fly up in the air, even one empty seat is an opportunity loss for you. Now imagine not flying at all and keeping your 50% of your fleet grounded. That's about 180 passengers per aircraft at a time when it's grounded. And on an average, even if one aircraft is able to do about 10 sorties in a day, you know, you're talking about 1,800 passengers per aircraft unable to fly. Multiply that into 26, that is the kind of revenue loss that airlines face on account of engines being faulty. Now, DGCA has asked Pratt and Whitney to seriously consider setting up an MRO here in India, so that a future Go First sort of a catastrophe can be, you know, avoided right before it, you know, as the early signs of a making of a catastrophe emerge. Now, Go First is not alone in its battle against Pratt and Whitney. And Go First is now going to deal with a separate set of challenges that will just come to. But even Indigo has about 50 aircraft right now which have Pratt and Whitney engines which are faulty. They need repair. They need urgent sort of, you know, overhauling and repair. So Indigo, which is India's largest carrier, could also potentially fall into the same trap of Pratt and Whitney, unable to service the engines, in time, resulting to Indigo keeping its fleet grounded. And Indigo flies the largest number of Airbus A320 aircraft, which houses these Pratt and Whitney engines. So Go First. So Go First is just step one.
Right.
Whether it makes sense, whether Pratt and Whitney will want to comply or not, given all that has happened by virtue of NCLT putting Go First under moratorium, not letting Pratt and Whitney access its, you know, its inventory of engines, and that is also something which may now further impact Go First more, because as per the Delhi High Court order, it seems now that even NCLT may have to amend the moratorium and let Pratt and Whitney and other lessors, for that matter, reclaim the grounded Go First fleet. So overall, the problem is fairly large in its manifest. At one level, of course, it makes business sense for an engine maker as large as Pratt and Whitney, which services a large enough fleet in a particular geography, to set up an MRO there. It is going to be, you know, cost effective for them. Hopefully, they will have to make initial investments to set up that MRO. But overall, it makes sense for them to be closer to their point of sale and point of repair and their clients, rather than being in this, you know, constant movement of parts or engines periodically. Now, secondly, I think it makes sense for the government, for DGCA, to put a little more, you know, heavy-handed sort of approach towards Pratt and Whitney, to make sure that Indigo does not fall in the same trap as Go First did because of faulty engines. And parallelly, Go First sort of, you know, future is looking a little more bleak than earlier, if lessors are indeed permitted to reclaim their aircraft and reclaim you know, all the inventory that is parked with Go First right now. So overall, for the aviation space, it's mixed signals. Good, an MRO should be set up, but bad if an voluntary or involuntary bankruptcy moratorium has to be diluted by way of lessors getting their inventory back.
Any reasons why Pratt and Whitney will not set up an MRO?
I think cost would definitely be one major, consideration, if not a constraint. So there is capital investment required. Then, of course, there's the whole business climate. Now, what Pratt and Whitney has seen in the case of Go First, and if it sees that the Delhi High Court order prevails, and even for airlines which are already undergoing bankruptcy proceedings, which also includes Jet Airways, for example, it makes eminent sense then for an engine operator to maintain distance with an aviation market where the legal constraints make it difficult for them to do business in. So would they want to invest there? Perhaps not. But if they see that the Delhi High Court order does prevail and a moratorium gets diluted or lifted, then the overall doing business climate in India becomes a little more conducive to engine makers and, for that matter, all sorts of industries that want to make investments in India. So cost would be one, and the overall business climate is something that they will be considering. And I think only if the two make sense completely, given that there are large aircraft orders placed both by Indigo as well as by Air India. Both of them have placed orders with Boeing and with Airbus. And we are also expecting by end of the year, if not earlier, even Akasa Air is likely to place 3-digit orders. So I think if the aviation pie is expanding at such a vast sort of
it makes
pace,
business sense.
It makes sense to be closer to your clients as opposed to being in one more geography and dealing remotely. With day-to-day issues.
All right. We don't know whether it's going to happen or not, but DGC, of course, asking Pratt and Whitney to set up a maintenance facility here in India. But moving on to a story that we're tracking by the way of state-sponsored cyber attacks on Indian government agencies and IT services firms. There is a huge uptick as far as state government agencies is concerned, a 460% rise in 3 years. This as per a report, of course.
Yeah, of course. I mean, Shweta, I think I am still myself personally fairly unclear on how do you define state-sponsored cyber attacks. There is a definition given by Apple on its support page, which we've delved into fairly deep all of last week, and that just suggests that this is, a state-sponsored cyber attack versus a regular cyber attack. Just, the line of difference there being that in the case of state sponsorship, you have vast resources, enormous resources deployed to target a very few select individuals, right? Whereas, according to Apple, again, the non-state sponsored or the regular cyber criminal attacks could be, perpetrated by individuals without the kind of financial muscle that states have, and in some sense could be a carpet bombing that you throw your net wide and you are able to catch some fish in it, as opposed to being very, very targeted and very specifically targeting few select individuals. Now, the report that you are referring to, Firm, a Singapore-based organization run by a person of Indian origin, claims that there has overall been a rise in state-sponsored cyber attacks across the world, and the number for India is higher than the rest of the world. So India has seen far more number of state-sponsored cyber attacks as compared to any other country in the world, and I believe the second country in that ranking happens to be the US. Right. Now, the report is also suggesting, and this is a report published in the Economic Times today, the report is also suggesting that the trend of state-sponsored cyber attacks earlier was largely Pakistan-oriented against India. Whereas in this case, apparently there would be evidence to suggest in the report that certain malware has been released by countries like China, Russia, and North Korea, all three, rogue in some sense of the definition of the word, perpetrating attacks against India. Now, how much of this can be validated, how much of this can be verified, we really don't know, because cyber security research firms perhaps deploy their own tools and deploy their own data sets to try and decipher what is state sponsored, which IP address is getting pinged, and when you trace the malware back, you may be able to reach some sort of a geographic location. But again, to specify state sponsored in how the general public and you and I would have perhaps understood state-sponsored, because you mentioned state-sponsored, it immediately, the mirror image that comes to your mind is government-sponsored, right? But a state could, in the given definition by Apple, could also be a large organization, could also be a large set of dark web users who've traded in in cryptocurrencies, made huge amounts of money going after a select few individuals. For what reason, I don't know. But, you know, the definition of state-sponsored cyber attacks is something, to my mind, which is still quite loose, and it needs to be sort of firmed up across the world. There needs to be this one common definition, and perhaps a better word for state if the state sponsorship does not mean government-sponsored. And again, I think break that definition up into domestic state-sponsored or international state-sponsored. So numbers are not good.
Okay.
India being under attack as reported by that you know, cybersecurity firm obviously you know, leaves more questions unanswered, opens up more questions. Why India? Why would Russia want to you know, do cyber attacks against India, against Indians? For China, I think it's understandable. Also, the fact that Pakistan up until 2015, 2016 was perpetrating more number of cyber crimes against India. Why is that reduced? One simple argument could be because Pakistan perhaps doesn't have the amount of money anymore, and it's fending you know, its own needs with greater urgency right now and seeking loans from IMF and World Bank, etc. But yeah, I think that is where we are. More number of cyber attacks against India as opposed to rest of the world, and these reports also at some point need to aid investigating agencies to understand why and who, rather than the numbers that we already have.
Why and who, and you know, it's interesting you pointed out, a state could be an agency, a state could also be a corporation, a state could also be a group of individuals who are complex, sophisticated, and have the right sort of resources. So you don't know what that state is.
Absolutely. So I think, you know, there was this little argument on social media all
Especially
of last week
Apple
as well, after
attacks.
Apple, that, you know, some you know, some sections of the population also saying, hey, this is George Soros funded. Now George Soros has, of course, enough and more money to you know, to run many operations, and an attack against a country or an individual which requires huge funds, I think somebody like George Soros would have it. I'm not saying he was behind it, but there were. So anytime
but then
there is an attack,
it
could be anyone, right? It could be absolutely anybody who has the resources. And to call it state-sponsored just takes the mind to, is it my state? Is it a sitting government? Who has perpetrated those attacks?
So we need
and
more
that
clarity,
does not
of course.
necessarily fall into the official given definition of state-sponsored attacks by Apple.
All right, we of course need more clarity, but the report that comes after Apple-related attacks also sheds light on growing state-sponsored attacks on Indian agencies. Moving on now to a story that we're tracking by the way of OTT platforms. I don't know if you watched many shows over the weekend, but there seems to be not enough shows, and what we also now know, there's not enough audience. And the audience growth in 2023, as per a report, has come down to 13% as opposed to 20% a year ago.
Not surprising again, Shweta. You know, I think again, when we look at the headline, OTT growth slows, but it is still OTT growth. It's not degrowth, right? So the simple point being that it grew 13% against the previous year's 20%, but 13% is also excellent growth. We've just seen, you know, Q2 go by,
right.
And which company has actually, apart from Maruti Suzuki and apart from, you know, the auto big ticket companies, look at IT companies for that matter, you've hardly seen a 12%, 13% growth. If you look at, let's say, a 10-year period, the benchmark indices, Sensex and Nifty, also give you an average return of about 12%, right? But anyway, so that is just sort of, you know, putting the number in context. But the fact being that a 13% growth, a 13% growth is definitely lower growth than a 20% the previous year, but it is growth nonetheless. Now, some reasons why this could be happening, and just crystal ball gazing here. Number one, it could definitely be a function of more number of platforms available and more number of subscriptions that every individual has to take to watch multiple shows streaming across multiple platforms. So this sort of enormous growth in the number of platforms is maybe putting a dent on the consumer to actually go ahead and subscribe to multiple platforms. This is number one. Number two, again, we've seen Netflix has come down heavily against password sharing. That doesn't seem to be the case yet with most other OTT platforms operating in India, whether it is Sony Live or Disney Plus, Hotstar, Jio Cinema, etc. So password sharing is again, one of the aspects that may have resulted in this decline in the growth rate, even though it is growth at one level. Then, of course, work from home coming to an end. People spending more time, or if not more, definitely pre-pandemic amount of time outside of the comforts or discomforts of their home, arguably, and hence not watching as much content as they were watching during the pandemic. And then, of course, this large base of 20% and higher that we've seen in preceding years comes on account of this huge spurt that came into OTT only thanks to the pandemic. So I think it is more rationalization of growth. It is definitely a slower clip, but a 13% growth also I don't think spells doom yet for OTT platforms. Now, of course, on the variety of content or quality of content available out there, that's a much larger debate. But the fact is that there are enough options still available for those who want to subscribe to a platform or two and consume content. Now, the function would eventually be, the profitability function would eventually come down to how much are OTT platforms spending on acquiring or producing original content, and how much are they sort of, able to justify those large expenses of content acquisition or acquiring those huge libraries against the kind of subscription revenue that they would see, and how much of that would get diluted when people continue sharing passwords. And would that eventually then lead to a kind of consolidation like is already in the works when you look at Disney Plus, Hotstar, that business wanting to sell, and the aggression with which Jio Cinema has entered and could take on more and more libraries, if not more and more players out there. And then, of course, we are seeing this Sony Z merger finally reaching some sort of likelihood of closure. So overall, there is definitely likely to be consolidation in the OTT space. And some good mathematics and economics will have to prevail on how much would you continue spending to acquire more customers and put out more content out there versus how much people are willing to pay. That fine balance will have to be done between all remaining players. And
come to think of it, there's still room for growth because OTT penetration in India is just under 35%, which essentially means that there are more and more audiences that need to be acquired and need to be reached out to in different geographies.
Right. So again, I think, if you look at this number of about 35% or so, these are 35% of mobile subscribers in India. But, I think you would have definitely a family of 3, for example, sharing one single subscription. So that way, I think the number is good enough already. I think now the battle is going to be more about taking away somebody else's subscriber and getting him to subscribe on your platform, as opposed to the whole market continuing to grow.
All right. So competition, of course, heating up in OTT space as more and more consolidation is in pipeline. But moving away to a story that has come in since yesterday and continues to dominate headlines, and that is betting apps. As many as 22 of them, including Mahadev, are now banned by the government. What does it really mean for people who were betting and for these apps that were in fact in operation for a while now, for years and years, and did not fall under any government scrutiny? So
Mahadev app has been banned, Shweta, primarily on account of ED alleging PMLA, which is Prevention of Money Laundering Act. So it seems that Mahadev app, which was registered in UAE, has been involved in some sort of money laundering activities outside India. So Indian money, which is being put into the betting platform, is being taken away outside of India, and perhaps that has resulted in Mahadev app specifically being banned. Now, Mahadev app, if you remember, has also been in some sort of a controversy along with allegations wherein there were some reports that suggested that Chhattisgarh Chief Minister Bhupesh Baghel had perhaps taken upwards of 500 crore rupees from the promoters of Mahadev app. Now, that investigation has been on for the last 1.5 years, and MeitY suggesting over there, and MOS for IT, Rajiv Chandrasekhar, suggesting that perhaps the Chhattisgarh government itself should have proactively, over the course of the last 1.5 years, taken enough steps to put an end to this app, ban the app on their own accord. Now, are the remaining 21 apps, remember a total of 22 apps have been banned, are the remaining 21 apps also involved in money laundering? Is that the allegation against them? I don't know as yet. Add to that, I think, you also need to look at this whole online betting versus game of skill sort of a debate, and betting still being a bad word in India, and the fact that if the end goal of any application, any gaming application out there is to make you take a punt and get a financial reward, that again is in the grey area of being banned or
so
not
we don't
being
know
banned,
whether
etc.
it's banned or not
So
banned.
Mahadev specifically, I think the report suggests that Mahadev was involved in online betting, and that is something that is not permitted because the company is also registered outside the shores of India, and hence the whole money laundering act comes into play. But the fact is that are the remaining 21 also online betting games? Are they also registered outside of India? Have they also been involved in money laundering or not? We don't know. So I think this is still going to be a developing story, and we'll see. We have seen the government ban apps in the past as well. In fact, 2020, 2021, we saw 2 tranches of Chinese apps being banned in India when there were skirmishes and little more serious sort of attacks against India by China on the border.
There's one clarity that perhaps many of our viewers would be needing, is that when Chinese apps were banned, it was clear that these apps are banned on account of data security and national agenda, and the security of the users who are using those apps. What essentially is the problem with these betting
Money
apps?
laundering. Simply,
with all 22 of them?
We don't know. So with Mahadev specifically, the problem seems to be money laundering. The problem definitely seems to be end goal of the app was to enable people to make money by putting a punt. And this organization, by virtue of being settled in or operating out of UAE and not within the shores of India, taking away all the money onto its its headquarters in UAE. And also, of course, there were allegations of corruption, etc. But that's a different political story. But overall, I think money laundering seems to be the primary case against these 22 apps. We know for sure Mahadev is booked under PMLA. For the remaining 21, we don't have the details as yet.
All right, so we don't have details of the other 21 apps that have been banned, but a total of 22 apps in government scanner have been banned. All of them have been declared illegal in India. But with that, we have run out of time on this show. Thank you for watching.
BYJU'S, stealthy, lethal,